We know the department store segment has faced challenges over the past few years. We have seen companies going bankrupt, for example, in the industry. The rise of online shopping, just one of the problems. Now, the owner of Hudson's Bay Company and Saks has secured a deal valued at about $2.65 billion US to buy the US luxury chain Neiman Marcus. Amazon and Salesforce are also minority investors in this deal. Let's get more from Liza Amlani, principal and founder at the Retail Strategy Group. Liza, thanks very much for joining us.
Thanks for having me.
Tell us, what is the attraction of Neiman Marcus here? Why would HBC want it?
I think that this deal actually has been in the works for some time. And what Neiman Marcus brings to the table is a very clear idea of how to connect with their customer, their loyal customer, and their new generation of luxury customers. This is the best part of Neiman Marcus, is they know exactly who they are and how to connect with their customer.
Is this industry in trouble, broadly speaking, the traditional department store?
Yes, I would say 100% department stores are in trouble. And I'd say that because department stores are almost lagging in keeping up with the times of retail. The way that they operate, many of them are quite archaic. They're siloed. They have stores that are empty, and they have stores that are full of markdowns. So we know that they don't have that right product at the right time down right.
I mean, the thing with department stores, as far as I know, was that they were supposed to have a certain amount of magic. Well, I know I'm painting with a broad brush here, that you didn't always expect a discount when you went in there.
Exactly. And I think what's interesting here is that you mentioned e-commerce. I think the other player in the game is also off-price. When you look at TK Maxx, TJX companies, Winners, Marshalls, HomeSense, they have a really great sense of selling brands for less, and the customer has gotten used to that. So in terms of discounting and marking product down, the retailer, especially the luxury department store retailers selling at full price, it's very hard for them to compete today. The customer also has a lot more choice today with online shopping, social shopping. They're able to travel and shop at luxury department stores all over the world. So in terms of choices and price points, there's a lot more that the traditional department store has to keep up with.
We've been hearing a lot of this awful word bifurcation for retailers here, that the lower income consumers are struggling, but the higher income are doing pretty well. So is buying Neiman Marcus a smart move to try to capitalize on the fact that higher income bracket consumers aren't feeling too much pain?
I'd say yes. I think that the great thing about this deal is that Amazon and Salesforce have thrown money at it. And what that means is Amazon, being such an incredible tech company that has captured this retail market by storm, they're a real force to be reckoned with. So now that they're partnering with Saks Global, they're going to have a stake in the luxury fashion game, which they've always wanted. This is also going to help the brick and mortar stores under Saks Global to almost invest and rethink the way that they go to market, connect with their customers, and really invest in digital transformation I would say in a very fast way, having these investors also having a stake in the game.
Can you generalize at all in the difference right now between US and Canadian retail? Is there anything that jumps out for you?
Well, outside of size, I would say that there is a luxury shopper in Canada. There's not as much choice as there is in the US. But I would say that in many cases, and I think Nordstrom, we've talked about this many, many times, that a lot of these US retailers coming up north don't actually understand Canada and the Canadian customer. We're very different across provinces. And we also expect a lot more from a experience perspective. Walking into the Bay, for example, there's elevators that are out of service, there's escalators that don't work, there's no staff in the stores, and piles of product that are marked down. It's not the best shopping experience. So I think that customers not only expect more, but Canadians, in fact, are very particular and are very different from our US counterparts.
Sorry, but so Canadians are particular, but you're saying that Hudson's Bay lately has not been giving them what they expect.
Exactly. And I think that's been happening for quite some time. You can see that the stores haven't been invested in. The staff, well, there's no staff in many cases. So the customer expects this from us. They shop in the US, they shop online, they can get whatever they need. They don't have to come to the Bay. We need to give them a reason to come into Canadian department stores, the Bay included.
Right. I guess Richard Baker, who heads up HBC, is a real estate guy fundamentally, and real estate is a driver of these kind of deals.
It's a big driver. And I think what's going to be interesting is that because the Bay is completely separate from this deal, we could see a change in not only the number of Bay stores that are going to be, I guess, left in Canada, but I think we might even see a real rethink and a reimagination of the department store in Canada. This could be the thing that the Canadian retail industry needs.